volatility is a statistical measure of the dispersion of returns of a specific security. Market volatility. Think about big swings. When you have days in the market that have a lot of ups and downs, that's a volatile market. When it's relatively flat, not volatile. 2020, been a little volatile. When the market has one bad day and it drops real bad, you might hear somebody say, "Oh no, the market dropped 5%. Look at all this money I've lost." I don't know why I did the accent. You have to say, well, hold on. Assuming you're diversified and in an appropriate risk allocation, which I hope all of you are, you haven't lost anything. Those 100 shares that you own didn't turn into 95 shares. There's still 100 shares. They're just temporarily valued differently today than they were yesterday. You haven't lost anything. It's just another down day in the market. And whether we're in volatile period or not volatile period, there are a lot of down days. One of my favorite financial illustrations captures this perfectly and puts it into perspective. It goes like this. Imagine there are 4 funds, A, B, C, and D. They start off at the same price and they end up with the exact same return. The only difference is their volatility. A is negative 50% of the time. B is negative 33% of the time. C is negative 25% of the time. And D is negative 20% of the time. Which of these would you prefer to own? It's not a trick question. Obviously, we want fund D because we want less down days in our portfolio. Here's the thing. This is not some made-up scenario. These funds represent the S&P 500's performance from 1970 to 2018, slightly rounded. The only difference is how frequently we're looking at them. Fund A, we're looking at it on a daily basis. So 50% of the days in that period were negative. B steps back a little bit and looks at it on a monthly basis. C looks at it quarterly, and D looks at it annually. So 1 in 5 days, or 1 in 5 years was actually negative. Watching the stock market every single day can be an exhausting roller coaster ride. However, stepping back and looking at longer periods of time, you start to see a much smoother experience, especially if you know you're invested appropriately for your long-term goals. Talk with your advisor to make sure you're invested appropriately. Oh, you don't have an advisor? Well.